Welcome out to Blue Skies Technical Trading Lab with Coach Matt. We're going to have a fun time here today after a little bit of a bloodbath in the S&P 500, the Nasdaq, the general market itself. Took it on the chin here today, and that's kind of where I really want to start here in the lab here today is just kind of having a general discussion on a couple different things. Number one, just the news of the day. Today was kind of that day we were expecting catalyst. Today was that day we were expecting quite a bit of price movement, and the market did not disappoint. Now, if you were a bull looking at that overnight action, maybe it disappointed during the actual trading session, but we got that price movement and the bears came to play. In fact, I don't even want to say the bears came to play here today. They just came and dominated. The bulls ran for the hills. They didn't even want to start the game because the Bears like, nope, we got a bigger stick than you do here today. And it was absolutely quite unreal, to be honest with you. RQ had probably what I would describe as one of the better entries that I've seen in this saga here. And I don't want to, jump all over your parade here today, RQ, but when you're looking at the NASDAQ here, ladies and gentlemen, right when that thing double topped and that got smacked right there, here's RQ right underneath the low right there. And if you want, like today, you look at the daily candle today, and I think how would everybody describe the daily candle today? Just two or three words. Two or three words. How would you describe the daily candle on the market today? Waterfall, Ripper, ouch, crazy, displacement candle, any Steve Miller song. I like me some Steve Miller. Power, zero, always zero. When I look at the daily candle, I see chaos, I see craziness, I see bulls running for the hills. I see good night. Yes, good morning, good night. Absolutely. But when I come into the intraday side of the equation, and when you're looking at kind of the market here today, let's kind of go before the market came out, because I do think we need to tell the story today of kind of what led to today a little bit. Because I'll give you a different answer on my two-word answer here in just a second. And I want to see if you agree with me on this one, because the daily chart, I think we can all agree, is chaotic, like just pure chaos, just no consistency to it really kind of much. When you look at the overnight session, however, let's first talk about NVIDIA. Now, is everybody familiar with the actual earnings analysis that came out of NVIDIA to kind of spark a lot of the conversation here today? Did everybody kind of review their report, or is some of you a little bit still maybe not knowing exactly what NVIDIA said? Okay. All right. So for those of you who are unfamiliar as of right now with what Nvidia said last night, Nvidia came out and they are the king, queen, and country of the AI trade. There's absolutely no doubt about that. They're also the number one catalyst stock in the marketplace. They are absolutely everything to the market. In fact, how Nvidia goes oftentimes is how the market goes. They're the number one market cap, number one earnings, you name it. You cannot write the market story without starting with Nvidia. And that's been the case for about 3 years in the market. And I'm specifically talking about earnings on that, but you can say the exact same things about the market itself. Nvidia coming into the print, coming into today, there was two conversations happening on the AI trade specifically, but there were two conversations that were sparked last quarter. Nvidia reported right here. The first part was we were seeing the acceleration of their earnings growth narrative start to slow down. That's number one. When they reported earnings right here, they came in with a 1% beat against EPS, a slight beat on the revenue side of the equation, and a less than 1% increase in guidance. Now, that, my friends, is one of the worst earnings reports NVIDIA's had recently because NVIDIA usually, has been beating by juggernauts over a long time. From this report until really kind of today, there's now been a debate in the AI space. Is there a bubble in the AI space? Is there not a bubble in the AI space? Can the AI trade carry the market? Can it not carry the market? There's been a debate, and everybody has questions on that debate. For example, let me ask you guys, is there a bubble in the AI trade? Yes or no? I think in some aspects, yeah. I think there's absolutely some areas of the AI trade that I think you could describe as bubbles. I definitely think it's when valuation doesn't support, when growth doesn't support valuation, Omaro, and price is still going up. It's one of those scenarios where, like, for example, Warren Buffett would say you shouldn't really pay anything more than 20 times EPS, and that's what a PE ratio is, right? And so if the PE ratio is 800, you're paying $800 for every $1 of earnings per share. If the PE ratio is 20, you're paying an average of $20 per every $1 of EPS. And so when you're talking about bubbles, it's when the valuation can't be justified by the growth narrative because everybody in the market is focusing on the future. We're willing to pay a higher price than what earnings are justified today because this is about the future. Everything in the market is about the future. And so there's been that debate. Now, I will for the most part say that there is some bubbled mechanics in the AI trade. That doesn't mean it's a bubble in general. Does that make sense, guys? Like when I look at the marketplace, there's always going to be some areas of the market that are absolutely outlandish. It just makes no sense in any capacity. But that doesn't necessarily mean the entire market is in a bubble. My point is not to debate bubbles or even define bubbles today. Go look at and research tulips. Those were the first bubbles. But my point is that when there's a debate and there's a concern, it's hard for the market to just giddy up and go, 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 go. There's constant debates, constant battles, constant this. And so coming into NVIDIA's print here today, I felt it was very important for NVIDIA to really put the final nail in the coffin of that debate. And the only way they're going to be able to do that is by expanding their growth, by saying, no, that deceleration we saw last quarter was just a bump in the road for whatever the case might be. Tariffs on China, being able to sell H20 chips, the Blackwell chip, or, lack of whatever it is, right? So, what they reported here today was they came out and they said, you know what? We're going to come in at 130 against the 125 expectation. So you see they came in at 130. And then when you look at the expansion from 81 cents to a buck oh 05 to a buck 30, that's good EPS expansion, certainly justifying this trend based on that EPS expansion. Number two, revenue came in 62% year over year increase. There's a lot of companies in the market that are not $5 trillion companies that would beg, borrow, and steal for 62% growth rate year over year. But officially, they came in with a $2 billion beat. Expectation was 55 billion. They came in at 57. That's a good beat there. But where it was really powerful, quite frankly, on NVIDIA's earnings report is they increased guidance on the revenue side by 5.4%. They increased it on the EPS side of the equation by north of 7%. Market was very satisfied very quickly on NVIDIA's report. So when you look at today's pricing and it's down, 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 but the market celebrated it on the overnight action, up, 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 and then held firm against all of that overnight action. You certainly came into the market today saying, yep, Nvidia did what they needed to do. Let's see what happens at that cash open. And the cash open just absolutely rejected everything that we saw transpiring on the overnight session. Now, a couple context points out of NVIDIA's report, because I do think this is important to understand. We're talking about the number one catalyst in the market. We're talking about the number one leader in the market. We're talking about the AI king in the market. We're talking about I can't tell you how important their earnings analysis is to the entire health of the S&P 500. It is off the charts that important to the fundamental condition and the technical condition of the market. Net income on Nvidia up 65% year over year. Data center build out 51.2 billion, 66% growth year over year. Even their gaming segment came in at 30% growth year over year. And one area of Nvidia that we have not tracked over time, but Jensen said yesterday to start tracking, so we need to start tracking it. It's auto and robotics. That came in at a paltry 592 million. That's a new segment for them, so sales aren't there yet, but 32% growth year over year. And that's without China sales. They only had $50 million in H20 sales to China. They do not sell the Blackwell or the Blackwell Ultra to China. And so, regardless of the second largest economic system in the world, NVIDIA had a great report. I don't think you can describe it any other way, quite frankly. A great report. And when a stock like NVIDIA has a great report and the market fundamentally rejects it, what should that tell us? What should that tell us? What does that tell you? What does a great report that gets sold by the market, what does that tell you? At a minimum, I'll let you guys answer and then I'll answer. We ain't buying the hype. I agree with that, Nacho. Sell the news. That's definitely the case here, RQ. It wasn't good enough. I think you can come away with that understanding, Ovi. Yeah. Nvidia's not going to save the day. I think you can have that takeaway as well. They take the money and run. Yeah, maybe gave it a little bit of it to OpenAI. Investors. See, when the market pumps on the overnight, is that investors or is that traders? Let's understand how this works. When the market is pumping on the overnight following an earnings release, is that the traders or the investors that are doing that? Who's putting in the orders to buy Nvidia after? It's not the traders, guys. It's investors. Investors are putting orders in to get triggered in the following day. It's investors. But who's doing that during the trading session? Is it the traders or the investors during the actual live market? It's not just retail, guys. It's all traders. It's all traders. So investors celebrated, traders sold. Investors bought, traders sold. Once again, investors bought the news, traders sold it. What does that tell you about the next direction? Because who drives price action after this? Is it traders or investors? It's traders. The event's over, the traders start dominating. They didn't get their edge here. Now, good reports, certainly not the death sentence of AI. In fact, I would say it's a positive thing in general to AI, but the market is being very clear right now saying we're not ready for prime time. Can we all agree with that at a minimum, regardless of what the causation is, regardless of how we personally describe it? NVIDIA is saying we are not ready for prime time yet. And if we're not ready for prime time, what is the path of least resistance? If a market is struggling with resistance, what is the path of least resistance? should be down, should be down. And so we're sitting at some pretty important support levels right here on NVIDIA, guys. Okay. And the reason I bring this up on NVIDIA today, we'll come back into the S&P and the NASDAQ here in a second, because if NVIDIA breaks 180 here, look what else is at 180. The 20 weekly moving average, and you'll see kind of how I see technical analysis in this conversation. But you see this right here, this 20 period moving average on the weekly chart. You see this right here. This is what we refer to as a moving average pocket. Now, moving averages are dominant in our market because of one specific reason. Algorithms use them. It's kind of, in fact, Ovi, that's a great way of putting it, quite frankly, because think about it like you're flying at 38,000 feet in the air and you go through an air pocket. What happens? What happens to the plane when you go through an air pocket? You go down a little bit, right? You go down. That's kind of a very similar thing. You have this pocket between the 180 level and the 150 level where there's legitimately open space there. And a lot of times, those moving average pockets, not all the time, pockets are like gaps to a certain extent. We talked about gaps last week, but pockets have a tendency to fill to a certain extent. And so you see this pocket here, and you're like, ooh, you better hold 180 because if you don't hold 180, see ya 150. And if you don't hold 180 on Nvidia, what do you think the S&P 500 is going to do when it's kissing up against the same thing? The exact same thing. Maybe a different path to getting there, but right here, we're sitting on the 20 weekly moving average. We're currently underneath that. And once again, you see this pocket here on the weekly chart. Not a lot until you start working till a little bit lower. And so, one of the things that NVIDIA kind of did here today is when a positive report like NVIDIA gets sold, it's the big institutions leaving a massive big footprint in the market, telling you that they are in the selling mode right now. Big volume on both the ES, NASDAQ, on NVIDIA today. Wall Street is in control. Algorithms are in control, but they absolutely sold a positive news day. There is no doubt about that. And we can debate until the cows come home, the causation and the reason and the rationale and the logic, but you're not going to find it because this happened out of nowhere. And at the end result is the market sold. And where should the next move be? Up or down from here? You guys tell me. Where should the next move be? Are we up or down from here? Nacho Sal's down. I'm not saying like where are we at tomorrow? I'm saying where are we at like over the next week to 2 weeks? Because after a big red day like today, it's not unheard of to see a development candle the next day, right? That's not unheard of. Ace, that is kind of a little bit. Once they get the edge, they kind of lose it. But I would say, based on the totality of technical analysis here, if you remove every other part of the conversation from the equation, I would have to say down. I would absolutely have to say down for a couple different reasons. Number one, this trend line right here is very significant for me. This trend line has been the trend line that, as long as we stayed above that trend line, I don't think you could have entered into ABC cycle. But the last 3 days, we've kind of been underneath that trend line, and then you saw that get rejected again. That trend line has held up against a ton of volatility in the last 3 months, ladies and gentlemen. Big 2 day move to the downside to kind of establish that trend line at 6,300. Massive volatility candle on that labor news that came down all the way in, broke the 50, hit that trend line. And it's where right here is when the trend line became something of importance. When you first when you first started a trend line, you don't know this is going to be the trend line. It was right here where it became a confirmed trend line. And then you see a week later, snapback volatility right into that trend line, recovers, good little bull move coming out of it. As we're navigating this retracement just a few weeks ago, a nasty candle on a Friday to kind of conclude that week. Where did it hit? Right on that trend line before it hammered candle. A week later, we had Groundhog Day last Friday, where we saw that exact same candle go all the way down to that trend line, recover back up. Two Groundhog Day candles right there. Like that trend line has been dominant. It has been absolute dominant. It has stopped a lot of bloodbaths in the market, quite frankly, until this week. You saw Monday test the trend line. Tuesday close underneath the trend line. Wednesday snap back into the trend line, and then we all know the story of today with Nvidia and the labor market news jumping up on the overnight session and just getting absolutely hammered. And so when I look at this from a big picture perspective, I would have to think that we are entering into some degree of ABC cycle on the daily chart, which is a short-term downtrend, A, B, and then obviously we would finish on the C there. And so that would be A, B, C as we come down into that 200-day moving average. That is as of right this very second. And I'm very open-minded to the bull development. But as of right now, that is kind of where my base case expectation is after we saw the rejection here today, just given the fact that once again, that trend line very, very dominant in the S&P 500 got absolutely shellacked here this week. Now it's acting as a resistance level. The 9 EMA is acting as a resistance level. These moving averages up at the top level are not even playing a role yet. They will act as a resistance level. The market for the bull sides needs some help. They need some help on the fundamental side. They need some help on the thematic side of the equation, and they need some help on the obviously the technical side. And so technicals, the Bears have a little bit of this control. Somebody mentioned MACD earlier this week, or excuse me, earlier today in the power hour. MACD, as you can see, the momentum is obviously expanding to the downside. It was a moral. Thank you for that. You see MACD kind of start to lose a little bit of their control here, but all of a sudden, lower, 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 kind of base there, but lower today. Obviously, you see that starting to expand. And so not only does the Bulls have some problems on the violation of the trend line, they don't control any of the price action right now. Like absolutely zero of the price action do the Bulls control right now. And that is after we did see that Nvidia news come out earlier. So I just want to really kind of talk about that because we are seeing some very, very interesting technical situations. Now, as the market flips script from bullish to obviously now bearish here in the short term, what adjustments should we traders make to take advantage of the downward pressure in price? And I'm sure many of you are already doing these things. I just want to have a general conversation on it. I do, Ovi. I do. I do think the 250 target is a legitimately good target here. I do think that's kind of the ultimate conclusion of ABC cycle in this short-term downtrend is around the 6,300 zone. And I would be in a very big reversal bull-minded perspective when we do get down there. Because I don't necessarily agree that AI is in a bubble. I do see some aspects of bubble in AI, but I wouldn't describe NVIDIA that way. I wouldn't describe the Max 7 that way. There are some elevated valuations right now in the Max 7. I'm looking at you, Tesla, but Tesla trades on growth narrative. So, I would switch it, but that would be the target in the ABC cycle is because, well, are you guys all familiar with the ABC cycle? I keep referencing it like you guys already know it. And I know many of you do. So I just want to ask the question, is anybody here not familiar with ABC? The ABC cycle that happens at the end of a trend, long-term trend. It's Elliott wave theory. Yeah, it's Elliott wave. So if you recall back based on Elliott wave, I'll just do a quick summary of it, just so that you guys have an understanding of what I'm talking about. Remember in Elliott wave, and we've talked about this in the lab before, Elliott wave is just a standardized thing, higher highs, higher lows, higher highs, higher lows. And then what happens is you start slowing down and you typically get some degree of reversal formation. But once you get like a violation of support right there, once you double top resistance right there, this bullish uptrend is no longer a bullish uptrend once resistance holds right here. Now, within the backdrop of the neutrality, you don't really get too opinionated. Once it lowers its resistance level, you start getting concerned for the bulls. Bulls should get concerned. Bears get excited. Bulls get concerned. Once it violates support right there, at that point you are now officially in a short-term downtrend. And in that short-term downtrend, it usually goes the first move to the downside after a violation is the A. So the first leg is A, the retracement is B, the last retracement is or the next wave is C, and then you start entertaining into a little bit of a reversal conversation. So in essence, what the ABC cycle is when you're looking at a longer term uptrend, say on the weekly chart here, you're looking at a longer term uptrend. The ABC cycle is a market correction, i.e., a short term downtrend that will basically be a corrective retracement against the longer term uptrend. Um, yeah, the B waves are hard to spot when they begin, Ace. Is that what you're talking like to identify the beginning of B? Because I have a tendency to kind of feel pretty decent about the conclusion of B, but I'm very open-minded to the beginning of B because when you're talking about the beginning of A, the beginning of A is really, really, really simple. We're already in the beginning of A. That's why it's really, really simple. The beginning of A is the lowering of resistance right here in the S&P 500. Now, when it's doing it in the real time, you don't know that yet because this is still a higher level of support against the support levels over here. And so you don't necessarily know it until you doji, and then this downward pressure in price creates that pivot at 69 here. And so looking back, yes, at this point, this move right here is A. And so what Ace is going to is where can A go down into before B starts? And that's where the difficulty is here because in a volatility event, where technical analysis doesn't usually care about your levels. Like, can we all agree with that? In times of volatility, your levels do not matter to the marketplace. Like your lines you have drawn on a chart do not matter. Not in times of volatility. No line does, no level does. Volatility is the kryptonite of all things technical analysis. And so what's difficult is we're seeing the volatility and it's breaking every degree of support level. So can I theoretically, Ace, come into the market and say, listen, this could be the ending point of A right here? Yes. And could I say, could this be the ending point right there on that 3 wick low, 4 wick low over there? Or can I say, yeah, of course. The problem is we don't know. And so it's one of those things where you have to read it in the real time with slowing momentum. And so for me, I'm with you. I'm with you 100%. But let's say it comes down here and then you're just tracking that pullback. At that point, I really like the B. And so A is the first initial surge to the downside. B is the first retracement against that downward pressure in price. C is the final conclusion and the last move for the bears until they officially get into the controlled of the ABC cycle. Now, every ABC cycle is going to take on a little bit of its cue, a little bit of its cue from other patterns. Now, looking historically, for example, this is an A, B, C pattern. You can see it right here, A, B, C. This one here, you don't have it on the weekly chart, more just a standard correction. This was a little bit of an ABC cycle on this one. This right here, would you describe the tariff event earlier this year as an ABC cycle? What do you guys think? Would you describe the tariff sell-off as an ABC event? I would. Here's your A. Here's your first leg to the downside right there. Here's your first retracement. Here's your last sell-off. And then guess what? Pivot up. And then once it broke through this level right here at 5,600, that bear trend's over. 3 moves, guys. Very clean. Very clean. And so this one was a little bit radicalized because of the overall tariff conversation was a very new conversation to us then. But even in that very volatility event, did the market conclude an ABC cycle before the buyers stepped in? Even in some of the highest volatility we've seen in the market in the last 4 or 5 years. Yes. Even in that tariff conversation where everybody was ripping the Band-Aid off, screaming to high hell here, guess what? ABC cycle played out. And so I deal with a lot of traders from a lot of different perspectives, from the scalpers to the day traders to the swing traders to the position to the investing class. And the number one question I've gotten today, and not just today, but the number one question I've gotten this week. What is the number one question I've gotten this week? And I've gotten it over probably 150 times. What is the number one question I've gotten this week? There is not a close second. LP, in some lot of different ways to ask, but the question ultimately is, when do we start buying again? And have you guys wondered that as well? In this environment, when do we start buying again? And I'm not talking necessarily about a 5-minute trade here. I'm talking about, when do the buyers step in from an institutional perspective? When does the accumulation phase of Wyckoff theory start playing out? When do the investors start seeing a value add? When does that start? And what was my answer? My answer all week long was, I don't know, because I don't know where A's going to end, kind of like what A said, but I fully expect to see a correction here. And how you navigate that is, when the buyers step in, they'll show us. They'll show us. We'll see that slowing momentum. They'll show us. We'll see that slowing momentum in trend. They'll show us. We'll see those slowing momentum candles. They'll show us. We'll see those pivots at support. But is any of that right now? No, none. Right now, you're underneath every significant moving average on the daily chart. You're underneath every major pivot point on the daily chart, and you're picking up steam to the downside, which means, in my estimation, and I do think, the market's obviously waiting on a catalyst, and catalysts can come anywhere. But I just wanted to kind of give that perspective, because I'm not sure the selling pressure ends until we start getting into around 6,250 to 6,300. Does anybody have any questions on NVIDIA, ABC cycle, the current daily edge on the market itself? If you do, please ask. Woji, if the price continues to go down after completion of ABC cycle, is that a trend change at that point? That would be officially a bear market. If price does not confirm after the conclusion of ABC, we're talking something big. We're talking something big. We don't talk something big very often. And something big is the macro landscape. Because we get corrections. Corrections are normal, guys. Corrections are normal. Everybody write that down. I want to see that in chat. Corrections are normal. They're very normal. And not only are they normal, they're absolutely needed. They're absolutely needed. Because if we don't have corrections, guys, all of a sudden we have a billion different valuation conversations. We have inflationary conversations. We have everybody hates a correction until they understand what happens to the bottom line. Corrections are normal. They are. We get them all the time. In fact, you look at a weekly chart. Just in the last 2 years, just in the last 2 years, we've had 5 corrections just in the last 2 years. They're normal. So, Woj, to answer your question, if it doesn't conclude here, what are we seeing? Well, my friend, you got to go back out a little bit more time than just this year to see kind of how that works out. Because when you go back more time and you're talking about the conclusion of ABC cycle, you're talking more something around the levels of, what happened during the pandemic. You're talking about 2008. You're talking about 2009. Those are bear markets. A correction is a bearish trend within the backdrop of a longer term bullish trend, which means the only thing a correction is in the grander scheme of things is on a weekly chart is nothing but a bullish retracement. That is all a correction is. It is a short term downtrend that punches down, drives up on the daily chart. That's all it does. And then it corrects on the weekly chart. That's all a correction is. But bear markets and corrections will last how long typically, guys? Do they last days, weeks, or months typically? Corrections. Days, weeks, or months? Days to weeks. Days to weeks. Days to weeks. Okay. Bear markets. How long do bear markets last on average? We're we're talking months to years. Months to years. The dot-com bear market lasted 2.5 years. The subprime meltdown lasted 18 months. The pandemic recovered in about a year, but economically, it obviously took us longer. So the difference between those two are literally night and day. One equates to the best ultimate buying opportunity you get in the market, and one punishes all bulls for a year. So, as of right now, what should I be thinking in my head? Should I be thinking Big Bear is here coming to steal everybody's Christmas, or should I be thinking we're going through a standardized correction? I'm definitely not the perma bear. Bulls cheat too much for that one. Yeah, for me, I'm just seeing this through the lens of a market correction. And as I'm seeing it through the lens of a market correction, what else am I more willing to do right now? Yeah, Becky, that's where my head. I think we're just tactically bearish, navigating the short-term bearish downtrend. That's what a tactical bear is. A tactical bear is just going to basically make sure to trade in the direction of the short-term trend. They're not perma bear; they're just tactically bearish against that short-term trend. So, what actions could I take? I want you guys to start to think like a trader and an investor. Let's put more hat on than just the day trader. What actions could I take to offset some of the risk in a market correction? If I feel we're going into a market correction, if price is going into a market correction, what actions could I take? Okay, Gabber, right covered calls. That's the first thing I do, Gabber. That's the first thing I do. Not even close. There's not a close second. On longer term holds, on investments, on position trades, slap a covered call. It'll alleviate 40% of the risk immediately, and it will give you some time to think about other actions. That's the first thing, writing covered calls. Absolutely. What else could we do? This is the second thing the others could do, though, Becky, for newer traders. And by the way, even newer traders, I still think they should embrace covered calls over time. Okay, there it is right there. Should I be willing to add more swing trades that are bearish? Could that help me offset some of the risk to the portfolio by being more accepting of bearish trades in general? Yes, absolutely. There's some really good bear trades out there. They're a little bit overextended right this very second, but there are some really good bear trades. Okay, so I could add some short-term bear trades. And can I also be much, much more willing to, on an intraday basis, be willing to sit there and take a short on the intraday side of the equation? Like, for example, me, I'm more prone to take a bullish trade in general. I am. I'm more prone to take a bullish trade in general. But am I much more willing to take a bear trade on the ES right now? Yes, absolutely. Absolutely. Okay. I do initially, like, when the market first pivots, Gabber, like we saw here today a little bit, I do as well. Like, because I'm gonna tell you right now, guys, I was not positioned for this sell-off like RQ was. I had to immediately start writing covered calls as it was going down before I even got a chance to do anything on the day trading side of the equation. I had three other bear trades out there to offset, but when that volatility hit today, I was one of the guys that was like, this is a really good Nvidia report. I felt we were going to see a little bit of a test up on the 6,800 resistance zone. Wanted to open it up a little bit, and I had to recover later on today. And so initially, as it was selling, I was going into the cover mode. I already had some short-term swing trades that I knew were offsetting some of the bullishness out there. But now that we kind of have underneath my good old fashioned trend lines and all that, am I much more willing now that I have all my other things locked down in the portfolio? It's kind of like, a hurricane's coming. You got to lock things down first. Now I have fresh eyes and I'm ready to giddy up and go, go, go. And so my process when we see this type of scenarios where we start entering into the ABC here is I lock down longer term first, and then I focus on the short term navigation of this. Because at the end of the day, Woj, I don't know if this is a market correction or if it's something bigger than that. And I don't think anybody here knows that for absolutely certain. I think we can all agree that the Bears have control of price. Can we all agree with that? And if the Bears are going to have control of price, we should jump on their team until they don't have the control of price. Does everybody agree with that? So even if you're the bull, you got to be willing to entertain that bearishness because we're traders. We don't wear the bull team jersey. We don't wear the bear team jersey. We let the technicals do the talking. And the technicals tell us that we should embrace more of the on the shorter side of the equation because you have to go with the trends. Exactly. The rising tide theory. As the tide comes up, all the ships go up. As the tide goes down, all those ships go down too. You got to be willing to embrace that a little bit more. Now, do we know where the end result is here? No. But will the technicals also kind of tell us that end result when they start to slow down? Yes. So as of right now, and again, I wanted to spend some time here today on the Nvidia news. I was fully planning on doing a whole bunch of back testing on the entry side of the equation, but with the market just absolutely doing what it's doing right now, I felt it was very important to have this conversation today because I know you cutthroat technicians out there know what ABC cycle is, know how short-term downtrends work within the backdrop of a longer-term uptrend. but I do think this is important as we will be navigating this as a team, obviously, over the next couple weeks, because I do think it will take a couple weeks to kind of get things dialed back in. Now, let's take a look at the current levels here to kind of update where those major levels on the intraday side of the equation are. When you guys start updating your levels, what time frame on the chart do you look at to update levels? It could be 2 days, RQ. It legitimately could. Like, markets are fast today. I'm always open-minded to that. Daily 4 hour, daily 4 hour. Everybody give me your kind of your hourly chart, 4 hour chart, day chart. I think you start high and you work low, right? I think you start high and you work low. So let's start high and let's work low. Now I'm going to do this on the ES, but you guys can do this on the NQ if you do trade the NQ. So let's go out and let's start with the weekly chart to understand where the major levels are. Now, where would you guys say is and let's first look at support here. So underneath the price, where would you say on this weekly chart are the major levels? Where would you say? Obviously, this 50 period moving average is one. That's kind of the end conclusion of this bear move, most likely. I don't see it underneath that, but would you see anything else here? Kind of 64.20, like into these wicks here. Every bottom wick. I only see the one personally. I only see one major level of support. That's it. 6150. That's the only major level of support I see. That's it. I don't see another major level of support in between this pocket. There's no pivot here. There's no pivot here. All of that is base consolidation. I would not consider base consolidation major levels of support or resistance on the weekly chart. And so, is there levels there? Of course. But guys, I'm talking major levels here. I'm not talking every single hypothetical level that could exist between 65.56 and 61.50. I'm looking at weekly pivots, weekly levels. Where are the major levels here? Major levels, I don't see anything here. I don't see one technical level in this price action here that would stop any volatility. None, zero, none whatsoever. It doesn't mean there aren't there. Okay. It doesn't mean they're not there, but that's a pocket, guys. That's a pocket. It's an air pocket. There's nothing here. There's no pivots here. You can't describe no pivots. And here's the Nacho, here's the thing though. When you have a parabolic uptrend with no retracements in it, it creates pockets. When you go from 5,000 in the S&P 500 to 7,000 in the S&P 500 without a retracement, it doesn't create pockets. I mean, it doesn't create strong levels. It creates weak levels. It's kind of like a technical house of cards. Once the level gives, everything gives. And so it's one of those things where, yes, could I identify all this, like the low here and kind of this little zone right here? Yeah, absolutely. Could I look at this little old resistance zone and say, yeah, absolutely. Could I look at these wicks and say, oh, yeah, absolutely. Could I look at these wicks and say, oh, yeah, absolutely. Like, oh, there's that old reason. Oh, yeah, absolutely. All of a sudden, you don't have an analysis, guys. You got more levels than actual that exist, and that's just on the weekly chart. There's no proper technical expectation when your chart looks like this, especially on the weekly chart. Again, the concept here is on the weekly chart, there's nothing. It doesn't mean there's nothing on the daily. It doesn't mean there's nothing on other time frames. It means on the weekly chart, there is nothing. I don't see anything between the current price and the 50 period moving average that is anything of significance on the weekly chart. So we know we have one right here. Okay. Let's look at the daily chart here. Now, I want you guys to pull up your daily chart on the S&P 500, and I want you to identify the major levels of support that you would see on the S&P 500 on the daily chart. There are more levels than one, mind you. 6420 right here. I agree. I think that is a level. Absolutely. I agree, Ace. 40. Oh, RQ, I love you, brother. The 200 SMA, I do think that's ultimate here is kind of where you want to see a reversal. Could you equally say 63 right here? You see the little bottom of the base here. See the volatility wick there. That's also right there at 63. So I'd say 63 would be one as well. Like here's that one right there. That certainly could be one. So here's kind of the last one within the ABC before you fill that pocket. And then you have that pocket. And then we should start to see some slowing momentum, all things being relatively equal, as we get into that pocket there. So how I see these levels on the S&P 500 here on the daily weekly chart that are the major levels right now is you do have this one at 65.40, 65.39. That opens up to a pocket down here around the 64.20 level. The 64.20 level, next major level after that is the 6,300 level. And the next major level after that is the 62.48 level, which is the 62.50 level, which is the 200-day moving average there. Gabber, to have your back adjust turned on the ES and TOS, are you talking about this one here, Gabber, just to make sure we're on the same page? Are you talking right here? Adjust for contract changes? I do adjust for contract changes. Sometimes I don't, by the way. But I do have them on this one. And that will matter here, by the way. That little red line. But those are the levels. Now, on the intraday side of the equation, you look at the 4-hour chart here, you could identify even more levels here. And so when I go through my process of identifying where support could form here, I start on the weekly and I want to be very selective on the longer time frames, because as I go into these lower time frames, I'm going to see a lot more of the data, which means I'm going to add to those levels. Does that make sense, everybody? So I want to be selective on that weekly chart. Because again, technicians, we can easily overwhelm ourselves. Have you guys ever done that, by the way? Overwhelmed yourself by drawing all these levels and then not knowing which one of those levels to trade? I am a big fan of something Becky said the other day in her mindset lab. Becky was talking about, and by the way, did you guys, who here was during Becky's lab on Tuesday? I thought she did a fantastic job. But Becky had that one chart up where she had that one slide up where she had these 4 charts, the daily chart, the 1-hour chart, whatnot. One was clean, one wasn't. I am such a fan of clean charts. I cannot tell you. I love clean charts. I am a big fan of clean charts. And the biggest, quickest way you can dirty up your charts is by drawing a billion different levels and drawing a billion different trend lines. You got to be selective a little bit. Where's the major levels on each one? Work top, down, top, weekly, daily, 4 hour, 1 hour, 30 minute. You work top down and you identify major levels. Yeah, that distraction, the distraction multitasking conversation, I could have swore she was talking to me during the entire time. I'm like, what are you talking about? I'm not on Twitter right now. Okay, did you see that tweet, guys? Yeah, I thought she was talking to me a little bit. And then I was like, are you telling me it's going to take me 18 minutes to get my focus back? What are you talking about? It's going to take me 18 minutes. And then I thought about it, my focus for the next 18 minutes before I got it back. I do believe I was learning in a live environment there, legitimately. Oh, so you're telling me I'm better because it only took me 18. I kid. All right, but does that help in identifying levels, guys? Kind of the top-down approach where you kind of be very selective on the weekly chart, work down, add to them, and now you know how to navigate that. Um, Once again, I was going to backtest entry today, guys. I just felt it was too much information to talk about today to get into backtesting entry. I do want to open it up to the team here. Thank you, Nacho. Did you guys have fun today? Thank you, Jaja. Now, what is and you don't have to answer today, guys. Okay? You don't have to answer today, but I want to get like a list of 5 to 8 technical topics that we can knock down week after week after week. So, if there's a technical topic that you guys want to really kind of work on, to master, to understand, don't hesitate to let me know. Um, I am always looking for content ideas to help you guys out. You are more than welcome. Stop loss placement, that is a good one. I was going to do a little bit of that today. Should we do rule setting for entry and stop next week? Like, let's all literally start fixing our rules for entry. All right, we're going to do a rule-based session on rules for entry and stop next week. Okay. Now, when we do a rule conversation, guys, we're not just talking about like entry technique. We're talking about the specific rule that you have for the entry technique, the specific rule you have for the stop loss technique. I'll tell you right now, I don't know if I'd be good at the tarot reading and the fortune telling, but I'd be interested in that one too, brother. I'd sit down for that. I think that's a Coach Becky one. I think that works with trading psychology quite a bit. Yeah, yeah. The other 6 listed, I got you. I got you. We'll let Becky do the tarot card reading though. I know, bro. I was joking too. Awesome. It's been quite the week in the S&P 500, the Nasdaq. The one thing that is dominant ever since the pivot at 6,900 is the bulls haven't carried any water since then. Any water since then. So, obviously, for the bulls, you got to see that change. And until then, it kind of is a bearish conversation. Now, the bears, we are overextended at this point. Oh, they do. They rip it every time. Every time. They haven't been able to help hold literally since the 6,900 test. That was a week and a half ago. Sold them all. All right, team. That's it for the trading lab here today. Like I said, we were going to get into entry and stop technique. I apologize for that today. I just kind of made a pivot at the very end. I just felt with Nvidia, with the selling pressure we saw today, um, I just wanted to have a technical conversation on where my head's at, and my head's in ABC cycle right now. So I wanted to update that. I wanted to update levels, have that conversation. We'll get back into entry and stop rules next Thursday, same time, same channel. You guys are the best. And the last thing I'll say is just sincerely, thank you for being the best part of Blue Sky, ladies and gentlemen. We love our community. We love hanging out in our community. We love teaching in our community, but we truly do it simply because you guys are the best. Without you, nothing we do matters. It's all about you. So I just wanted to say thank you for being the best part of Blue Sky. And if you need anything from me, do not hesitate to get in touch with me. I will not be in the stream tomorrow. I do a lot of writing on Fridays, but I am available if you guys need. And so I'm usually doing a lot of writing, kind of a lot of research. Fridays are a writing and a research day for me. And so if you need to hit me up in Discord, never hesitate to hit me up in Discord. If you want to add me as a friend in Discord so that you know you're talking to the right Coach Matt, because there's a lot of fake Coach Matts out there in Discord, please do so. Outside of that, everybody have a wonderful, wonderful rest of your day. And if you need anything from any of us at Blue Sky, hit us up in Discord or we'll see you tomorrow as well. Thanks, team.